Welcome to Markets Now. I'm Michelle Rook along with Darin Newsom, Senior Market Analyst with Barchart, and we are seeing a mostly higher action this morning with the exception of the cattle market. And Darin, we saw some recovery in the grains after the big washout previously. So yesterday, some gains. Today, we're seeing a little bit of follow-through buying. So have we put some bottoms in, or at least are we finding some areas where there's some value for end users?
Yeah, I think that's exactly what happened Wednesday. If we look at, the May corn contract, it likes round numbers. It got down to 622 and a quarter on Wednesday, early Wednesday session. And then, it just looked like there's some commercial activity. There's some commercial buying being done. May started to pull away from July, the rest of the session. By the end of the day, it was back over 630. So, and then, overnight we saw it get back above 640. So, yeah, to me, it looks like some commercial interests saw this as a pretty good bargain, this 50, 60 cent sell-off, whatever it's been the last couple of weeks. So they stepped in. They started buying again. Yes, we know there's still demand for corn. We know U.S. supplies are still tight in relation to demand. And so, we got a nice bounce out of it. Short term, looks like we could be turning this market up for, maybe a week or so, a couple of weeks. Long term, I'm not seeing much change yet on either the weekly or the monthly charts.
So do you think we put in lows as well intermediately on wheat and soybeans as well here and can recover from that? And what kind of recovery are you expecting off of these lows?
Again, if I'm looking at the May corn contract, we got down to 22 and a quarter. Certainly could get back into the 646 to 660 range. So let's just call it 645 to 660. And then it might start to come under some pressure again because, again, we have not changed the intermediate term. We've not changed the long-term trends. And if, a lot of this is going to be if demand stays strong. We know all three categories of domestic corn demand been a little bit weaker. As we moved through February, we still had a lot of cattle on feed, but they grew smaller over the course of the month. Exports have not picked up as of yet, and ethanol demand still hasn't kicked into its seasonal strength. So, there is some concern. We saw it play out in basis, at least U.S. basis on Wednesday evening. As for soybeans, it's a very tight U.S. Supply and demand situation for soybeans right now. Right. So, again, you get a bit of a rally. It wouldn't be a huge surprise.
Yeah. What about the wheat market? What kind of recovery do you think we can stage there?
I think the biggest market that we're watching here is the July Kansas City. At some point, as we've now moved into meteorological spring, I think traders are going to take into account the fact it's just a bad situation across the U.S. Southern Plains. Latest U.S. drought monitor maps isn't showing any improvement at all. The folks I talked to are comparing it to disasters back in 1989. And July KC held its previous lows of 801.5 and 799. So I think we could bounce out of that. I think we're going to start to turn that market higher. And if the wheat market starts to go higher, I think it's going to be led by July KC.
So talk about the wheat market in terms of why we had to go down, at least in Chicago, and I think even Minneapolis, and score new contract lows. Was there fundamental justification behind that, do you think?
In the Chicago market, there certainly is. We look at Kansas City and Minneapolis spreads; they're still both bullish. We know those are tighter supply and demand situations. But Chicago, is one that has everyone's attention. I know March contract is in delivery, but still, that March-May future spread covering about 80% calculated full commercial carry. That's just a bearish situation. That just means we've got too much supply in relation to demand. It's not going to change anytime soon. And again, as we look towards the new crop, out in the July contract and so on, the weather's been pretty good here late winter for most of the Midwest soft red winter growing area. So not seeing any problems at this point. So if there is more acres of winter wheat, and we've got the U.S. Midwest and parts of the East where the soft red winter's grown, looking to be in pretty good shape coming into spring. It's good to start to put pressure. That could keep some pressure on the new crop soft red winter market as well.
So you mentioned demand in the corn, and really, if you look at the weekly sales and exports this morning, they were pretty much lower across the board, and in fact, a marketing year low for soybeans, which we would kind of expect, I would say, this time of year. But do you think that the demand is going to kind of snuff out any ability here for this market to really regain strength?
That's a great question, Michelle, because it is a key issue. I mean, we're looking for, soybean demand to start to slow. It's just that time of year. We know there's ships moving out of Brazil. Harvest has been slowed, but there's still ships moving out from Brazil. So, soybean demand does, soybean shipments do start to fall. The big question is corn. It's the second half of the marketing year where most of the corn gets shipped. And we're off to a slow start. I know this was just for the end of February, but we're starting in a hole because we just didn't do much for the first half of the marketing year. So we're going to have to see some. We're going to have to see some sales being made. We're going to have to see more shipments per week, and corn's just going to struggle a bit. And we have to keep in mind, it's very possible the U.S. just simply doesn't have the corn to move to export this year. We've come off of 3 years of lower production. Now, as we go into 2023, 24, that could certainly start to change. But, to me, it reminds me of the 2010, 2014 4-year period, and we seem to be getting towards the end of that.
Yeah. So to your point, exports this morning, if you look at the total so far for the year, corn exports are down about 40%. So we've got some work to do to catch up. On the other export front in corn, we heard yesterday talk that maybe China had come in and bought some U.S. corn. We didn't see anything on the flash sales this morning, but these are levels where you would almost expect China or somebody to come in here and do some buying, as we talked about earlier, right?
Mm-hmm. Yeah, it wouldn't be surprising at all. And we'll see this, again, it doesn't show up on the daily reports. And again, that's not a huge surprise. So we'll be looking forward to the next couple of weekly updates. If there were some sales made on Wednesday, that should show up in the next set of reports. So we'll be keeping an eye on that. But, and that's where it'll get interesting. If we actually start to see some sales adding up for, unshipped sales adding up, that'd be a bullish sign that we do have the possibility of some business. And certainly reflective of that, the safrinha crop in Brazil, certainly slow getting planted, pushing it back a little bit. So, some of the world's buyers are having to come back to the U.S. when maybe they hadn't been planning on.
So the cattle market, as I mentioned, a little lower opening with some follow through after a lower day yesterday. Feeders are coming back now, but in the live cattle futures, yesterday we made new contract highs and it looked like we put in a key reversal. Is this topping action, do you think?
We've seen bearish technical patterns for the last 6, 8, 9 months, whatever it's been, on daily charts for cattle, and they just get washed away. So I'm not putting a lot of emphasis on what we see on the daily charts. Weekly, I think we have to keep a pretty close eye because it's possible we could start to put some intermediate term tops in these markets. But the bottom line is, again, there's just so much buying in this cattle market. We saw the April live cattle get within sight of it. The market's all-time high, up just over 171. We saw feeders hit, some of the contracts climb above $200. Yeah, it's hard to imagine people wanting to buy up here, and that always opens the door for a sell-off. But we just haven't seen, I don't think we've seen a general change in sentiment or approach to these markets yet. Maybe just ran out of buying for a couple of days.
Yeah, but the open interest has been going up, to your point, and we're not up at the record levels that we saw, I think, back in 2019 in terms of open interest. But there are, as you say, people that are interested in buying this market on just about every pullback. All right. The other thing is if we get some stronger cash again this week, I mean, the market's kind of expecting that we could go right back up, don't you think?
Yeah, it's one of those weird situations where cash has been following futures. It's usually the opposite, but in this case, what we've been watching for the last, again, 4, 5, 6 months is the cash market's been very comfortable following the futures. And we saw the February go off strong last month, and now we've got the April contract still, April live contract still showing a good deal of strength. So, a higher cash market this week would not be a huge surprise. At some point, you'd think it's going to top out, but if boxed beef can stay strong, so the product coming out the other side of the packing plant still is, there's still good demand for it. It's going to be tough to break the cash market.
Gotcha. So not that anybody can figure out this hog market, but we've had strong exports again this morning. Cash and cutouts are starting to bottom. We are seeing a little bounce this morning. I guess the question is it going to hold here?
That is the question of the day. And I found it amusing on Wednesday. You know, out of the three livestock markets, it was lean hogs that posted on their long-term chart. The lean hogs posted a bullish 2-month reversal, you know, indicating the trend, probably the long-term trend may have turned up. And so what did it do? It immediately went down on Wednesday. So again,
Yep,
hogs being hogs. Yeah, it's just impossible to get a good handle on it. But you know, we have seen some pressure on the spreads. We have seen some commercial selling in this market. And if we can't get that turned around, I'm not sure that we're going to be able to hold short-term rallies, at least for a little while.
Yeah. And we hear there's more numbers coming at the market here with the Sutter figures picking up. So that may be another factor kind of keeping a lid on this market. All right. Thanks for joining us. Darin Newsom, Senior Market Analyst for Barchart. And that's Markets Now.